Imagine walking into a building where the smiling teller knows your name, offers you a free coffee, and actually cares about your financial future. Now picture walking into another building where the lobby feels like an airport terminal, the lines are long, and you're just account number 43,829. Which place would you rather trust with your money? That's the big question. Credit union versus bank. Which is better for you? By the end of this video, you'll know the answer. But don't jump ahead yet, because what most people think is the better choice might surprise you. Number 1. What is a bank really? Banks are for-profit businesses. Their job is to make money for their shareholders. When you deposit your paycheck, the bank uses that money to issue loans, credit cards, and investments. The difference between what they charge borrowers and what they pay you in interest is profit. For example, if you have a savings account paying you 0.5% interest, but the bank loans that same money to someone else at 10%, the bank pockets the difference. This isn't evil. It's just business. But it means your relationship with a bank is more about what they get out of it than what you get. Number 2. What is a credit union? Credit unions look like banks on the surface, but they are member-owned nonprofits. Instead of shareholders, the members, you, own the institution. This means when you open an account, you're not just a customer. You're technically part owner. Profits don't go to Wall Street investors. They go back to members in the form of better interest rates, lower fees, and sometimes even dividends. For example, a credit union might offer you a car loan at 6% while a bank charges 9%. That 3% difference can save you thousands of dollars over the life of a loan. Number 3. Accessibility and convenience. Banks usually win when it comes to size and convenience. Big national banks have branches everywhere. Their ATMs are on almost every corner, and their apps are polished with fancy features. Credit unions, on the other hand, are smaller and often local. They may have fewer branches. But here's the twist. Many credit unions participate in something called a shared branching network. That means you can use thousands of other credit union branches and ATMs across the country, even if they're not your home branch. So while banks may appear more convenient at first glance, credit unions aren't as limited as people think. Number 4. Interest rates and fees. This is where credit unions usually shine. Because they're nonprofit, they don't need to squeeze every last penny out of you. On average, credit unions pay higher interest rates on savings accounts and charge lower rates on loans. Fees are often cheaper too. For example, a credit union may charge $25 for overdraft while a bank charges $40. Banks, however, sometimes offer promotional deals, like a $300 sign-up bonus if you switch. That can be tempting. But long-term, the ongoing lower rates at credit unions often outweigh the one-time perks banks dangle. Number 5. Customer service experience. Here's where the story gets emotional. Imagine you're in financial trouble. Maybe you lost your job or had a medical emergency. You go to your bank for help. Do they know you personally? Or do they see you as just another account? Credit unions are known for a more personal touch. Because they're member-focused, you're more likely to speak with someone who actually knows your story. Many members describe their credit union as family. Banks, especially large ones, may offer professional service, but it's usually more corporate and less personal. Number 6. Technology and innovation. Banks usually lead in tech. Their apps often have the latest features like mobile check deposits, budgeting tools, and even Zelle for instant transfers. Credit unions sometimes lag behind. Their apps can feel outdated. But in recent years, many have improved dramatically, and the gap is closing. If you love cutting-edge digital tools, banks may have an edge. But if you just need basic mobile banking, check balances, transfer money, pay bills, credit unions usually get the job done. Number 7. Safety of your money. Both banks and credit unions are safe. Banks are insured by the FDIC, which covers up to $250,000 per depositor per account type. Credit unions are insured by the NCUA, which offers the same protection. So whether your money is in a bank or credit union, up to $250,000 is backed by the government. There's no difference here. Number 8. Eligibility and membership rules. This is where credit unions are a little different. You usually need to meet certain requirements to join. Maybe you live in a certain area, work for a specific employer, or belong to a group. But don't worry, the requirements are often easy. Some credit unions let anyone join with a small donation to a partner nonprofit. Banks don't have membership rules. Anyone can open an account as long as you meet basic requirements. Number 9. Loans and credit cards. Credit unions often offer more favorable terms on loans and credit cards. For example, they may approve borrowers with lower credit scores that banks would reject. This can be life-changing. Imagine a young couple buying their first car. At the bank, they might be quoted 12% because their credit isn't great. At the credit union, maybe it's 8%. Over 5 years, that saves them thousands. Banks sometimes offer flashy credit cards with big reward programs, travel miles, cashback, perks. Credit union cards may not always match those flashy offers, but they often have lower interest rates. So if you carry a balance, a credit union card could cost you much less in the long run. Number 10. The hidden downsides. Now, let's be fair. Credit unions are not perfect. Some are small, underfunded, and their apps may frustrate you. They may not have the same international reach as large banks if you travel abroad. Banks, while pricier in fees, do have the advantage of scale, resources, and global access. If you travel a lot, need instant support in any city, or rely on advanced tech, banks can be more practical. Number 11. Which one builds wealth faster? Here's where the debate gets interesting. If you're trying to save money on fees and loan interest, credit unions usually help you build wealth faster. For example, if you save $10,000 in a credit union account earning 2% interest, that's $200 a year. In a bank account earning 0.5%, you'd only make $50. Over years, the difference compounds. But banks may offer better access to certain investment products, like brokerage accounts or advanced financial planning. If you want to invest in stocks and bonds directly through your bank, you might find more options there. Number 12. The surprising hybrid strategy. Here's a secret most people don't realize. You don't have to choose one over the other. Many savvy people use both. For example, they keep their main checking and savings with a credit union for better rates and lower fees. But they also keep a credit card with a big bank for the travel rewards and an investment account with a national bank's brokerage service. This hybrid approach lets you enjoy the best of both worlds. Number 13. Community involvement. Credit unions are often deeply connected to their local communities. They might sponsor school events, donate to local charities, or even host financial literacy workshops. Banks, especially large ones, may also give back, but their efforts are often nationwide campaigns rather than personal local involvement. If you value supporting your community, a credit union may feel more aligned with your values. Number 14. Decision-making power. As a member of a credit union, you technically have a vote in how it operates. For example, members can vote for the board of directors, who guide the credit union's decisions. At a bank, decisions are made by executives and shareholders, and you don't get a say. So if you like the idea of being more than a customer, actually having influence, a credit union gives you that opportunity. Number 15. Financial education. Credit unions often prioritize teaching members how to manage money. Many offer free financial counseling, budgeting tools, and workshops. Banks may offer some educational resources, but credit unions tend to emphasize it more because their mission is to serve members, not just maximize profit. For a beginner learning how to save, invest, and build credit, this support can be priceless. Number 16. Credit building opportunities. Credit unions may be more flexible when it comes to helping members with poor or limited credit histories. They often offer credit builder loans or secured credit cards designed to help you build or rebuild credit. Banks usually have stricter lending standards and may deny applications outright. This makes credit unions a strong option for beginners trying to establish a healthy financial record. Number 17. Business services. Banks typically have a wide range of services for businesses, including larger loans, merchant accounts, and international business support. Credit unions may offer business services too, but on a smaller scale. If you're starting a small local business, a credit union might provide personalized guidance and better rates. But if you're running a large or international company, a bank's resources might be more practical. Number 18. Risk during economic downturns. During recessions or economic crises, Big banks may tighten their lending standards quickly. Credit unions, being community-focused, may try to work with members to provide relief, like temporary payment deferrals or emergency loans. This supportive approach can make a huge difference when times are tough. Number 19, culture and atmosphere. The vibe of a financial institution matters more than people think. Credit unions often have a warmer, more welcoming culture where staff build long-term relationships with members. Banks, especially larger ones, may feel more corporate with strict policies and less personal flexibility. If you prefer a friendlier, less formal atmosphere, you might feel more comfortable at a credit union. Money is personal. For some, the friendly, member-focused vibe of a credit union feels right. For others, the convenience and tech of a big bank win out. So now that you know the real differences, which side are you on? Would you trust your money with a community-driven credit union, or do you prefer the global power of a big bank? Drop your thoughts below. I'd love to see which way people lean.